10-year note yields moved lower to end the week in a narrower trading range, about 6 basis points. We traded from 417 up to 423, but ultimately closed below 420 for the first time since March. This coming after a busy week. We heard from the Fed chair. He gave a mixed testimony to Congress this week, but did say that the Fed may not wait until inflation gets down to its 2% mandate before it begins cutting. Likewise, we had weaker than expected CPI yesterday, which really fueled rate cut expectations. Now seeing the Fed Fund futures price in a 100% chance that they cut 25 basis points at September FOMC, followed by another 25 basis point cut in December. All that drives 10-year note yields lower, again closing below 420 for the first time since March. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll notice that volatility has been trending lower all month. In fact, we've seen volatility ticking lower outside of maybe 1 or 2 days where we saw an uptick ahead of the Fed chair testimony, taking it down to month-to-date lows to close the week. So it has been tracking with yields this week. As yields move lower, volatility has moved lower with it. Lastly, let's talk about what we have next week. Well, after this week's Fed chair testimony, we're going to hear from the Fed chair again on Monday as he's doing an interview from the Economic Club of Washington, D.C. We also get retail sales. We will get more auctions, and then we'll hear from more Fed speakers ahead of the Fed blackout period ahead of the July FOMC meeting. So a busy week in 10-year note yields, dropping 10 basis points on the week, closing below 420 for the first time since March, ahead of next week's Fed chair interview on Monday, retail sales, more auctions, and more Fed speakers.